Welcome to Things Crypto Space. We are live on the Wednesday, 28th of July, 20 past 1 p.m. London time. So today I'm going to talk about do's and don'ts in the crypto space for newbies, but also for advanced as a reminder. People like me who's been in this space for 4 years, sometimes I still make the same mistake or tend to have the similar emotionally attitude towards those who might just came into the space. So it's always good to remind ourselves what we should be doing, what type of mentality we should be holding, and what we should try to avoid doing. So please like and subscribe. And anything I say today is not financial advice, and it's only for education and entertainment purpose. So let's get started. When I first came into the crypto space in 2017, I got know this field by friends of mine in China that they were doing. They were buying coins, but they were also shifting coins between exchanges to make some money from buying and selling. Because at the time, the market wasn't mature enough like today. That all the prices of the projects are the same on all the crypto exchanges, although there's still a small difference, but not as significant as before. So there have always been different ways of making money. And the first time when I heard this method, I was like, what's that all about? I don't have time to do that. So I actually ignored what my friend was telling me about crypto and Bitcoin then at the time, because there were a very limited amount of projects in 2017. So I missed the first opportunity of actually getting serious about crypto. I just thought that was more sounded like a stupid thing to do. But then I think it's half a year later when Bitcoin reaches the highest price of 19,000 US dollar or almost 20K, that I started to really notice crypto and start to really read into it and buy into it, spending money and register myself on different exchanges and so on. So it does take time for anyone to actually absorb the information that's been given to you. And it's also depending on the timing and the chances for people who actually really go into something. It's just sometimes it's a bit of coincidence, isn't it? When you like or dislike something, when you're into or not into something. So I think we're all emotional animals. We think we're objective. We have logic in our heads. We read information, we assess information, and we make decisions on the information we read on our past experience. But by the end of the day, it is actually a subjective this decision you make. Most of the time, it is down to you. It's down to how you like it or how you don't like it, regardless of if you want to admit it or not. It's like when you buy property, people here in the UK like to have boxes being ticked. So they will have a list of things, a criteria, 1, 2, 3, 4, 5, maybe price, maybe location. It could be a size of the house. It could be south-facing garden. It could be if it's near a school. It could be, whether it's 3-bedroom or 4-bedroom. And whether it has got potential of converting a roof or doing an annex at the back of the garden, or is it near a train station, etc. So you will have a list of all the tick box. But then by the end of the day, when you finally make a decision, okay, some of the boxes might be ticked, one or two or few of the boxes might not be able to be ticked, but it actually is your emotional attached to the house you viewed that you really like. By the end of the day, you don't really need to give yourself 10 reasons of buying the property. It's I like it, right? So it's the same principle applied to the crypto space that we need to be aware of, because that's where you tend to be formal in, and that's sometimes when you tend to be FUD, which I will explain, which part is what I want to say about don'ts. But sometimes it's, we are human beings. Not everything we do can be so objective, can be so disciplined. And sometimes we don't want to be disciplined. Sometimes we just want to relax. We want to go with the flow. We want to listen to our emotions. We want to do what we like. I think that's part of the purpose of meaning of life, right? You want to do something you like. You want to do something you enjoy, so long as you're not hurting someone else, you're not losing big chunk of money. We're free to do what we like. And I think, yes, we want to make money in the crypto space. And yes, we are interested in the field, maybe because of the technology, because of we believe in bitcoins and all the other coins. We believe in the type of investment we choose that are good enough and better than other investment choices on the market. And maybe this is something we can afford to do rather than buying a whole house or buying multiple houses, because houses are expensive. And we want to increase the value of the money that we work really hard on. We don't want to see it being deflated, right? So do's and don'ts. But my principle is, okay, you have logic behind your head, but do things you like to do, but just be aware of your emotion. Be aware of what type of person you are, what type of investors you are, and be sensible, even you're emotional. I know it's a little bit controversial, but it is what we are. So do's. First thing is DYOR, which stands for do your own research. Now, it is a phrase, a short phrase, words that we hear of a lot, DYOR. And all the YouTubers who give people advice or introduce projects will give you a whole lot of reason of how bullish they are on one particular project. And then in the end, they will always say DYOR. And it sounds like, okay, yeah, I will do my own research, but you told me everything already. That is part of my research. And I'm so bullish as well, like you, and I'm just going to go for it, right? So what is the real DYOR, and how should we do DYOR? Um, I'll use Bitcoin as example, because I'm assuming a lot of people who are listening to this video of my series 9 would be newbies that are still curious on what I have got to say. And I think if you're gonna, first of all, listening to a lot of things about what's happening with crypto, what's been happening with Bitcoin, and if you finally made a decision on coming to the space, the first thing you're gonna buy is probably Bitcoin. After maybe you will buy stable coins to start with. But holding a stable coins and not doing anything is equivalent to holding GBP or holding US dollar or holding RMB, right? So you are going to buy something, right? And Bitcoin is probably something you're going to start to buy, and Ethereum. So how do we do DYOR on Bitcoin? Hasn't it already been DYOR by so many people? Do I still need to do that? Yes. Okay. For Bitcoin and all the other projects, there is a website. There is a sort of like an official website that you could go on to check everything on the website. Is the basic thing to do, right? And then to read the white paper. Okay, you're not a tech person. I understand that. Neither am I. But you can probably understand 50, 60% of what's written on the paper. Maybe you can't read the codes. You can't really understand the mathematical formula written on there. But if you actually look at the Bitcoin white paper, it is not that complicated. It is actually quite simple to be understood. You can read in English. If you have some English language foundation, then I would definitely say try to read in English anyway. And then there'll probably be a copy of translation of your own language from your own native country, which you will read. But sometimes the translation is so staggering. It's like it actually makes it more difficult to understand. And I think whoever writes this white paper originally, if they're English native speakers, the plain language they use and all the words explaining a particular technique are actually easier to understand. So I would recommend go on the official website, read white paper, both your own language and English language. It might sound very basic, but be honest. How many white papers have you actually read? Right? for all the projects I have participated in, I probably only read maybe 20% of the project white paper. I would say it's already quite good. So that is something you should do, and I should do too. Like, I don't even think I've read the Ethereum white paper properly. I read Bitcoin white paper a couple of times in the past, but probably not, like, I haven't read Curve. It's really complicated. I haven't read Aave, I don't think. And these are the projects I participate in. So there's some homework I need to do after my talk today. So back to DYOR, what else can you do apart from looking at the website and reading the white paper? Okay, for Bitcoin, there are loads of information. There are a lot of tools you can use. There's something called Crypto Fear and Greed Indication Index that you can look at, learn how to identify when to buy, right? So if the fear and greed index is lower, like 20, under 30, you can probably buy. And if the fear and greed index goes up to 80, 90, then you're going to be aware maybe you will be start selling. And that's quite on the opposite of people's emotion and mentality. That is some indicates you need to understand that you could read. Or if you're following any YouTubers or anyone KOLs, you need to understand what they're talking about when they mention this index. So there's also a BTC on AHR 999, which is teaching you how to DCA. Okay, so DCA is another dues I will touch base on. So DCA is a dollar costing average. So basically, it's like you just allocate a sum of money and you put it in on a weekly or monthly or daily, whichever way works for you, basis with the same amount of money, regardless of how much market value is. So overall, you are more likely to get a very reasonable price, average price over the period of time you invest in. So BTC hyphen AHR 999 is actually a really good indication to tell you when is the good time to enter into the DCA. But for most people, if you've decided to use DCA, like there is also a website actually calculating all the past period of time. And if you put this amount of money at when, and if you DCA in a weekly or monthly basis, what's your return is going to be. So it's like there are a lot of tools that actually shows that. So you can actually work out if you want to do DCA. DCA sounds really easy, but it is, I find, the most difficult thing to do for anyone. A lot of people just can't do it. They're either FOMO in, like they just want to go in one go, or maybe periodically they think if a price went down particularly, and they will just buy, with most of their money, they won't be able to have the patience to DCA. So that is actually a bit of a challenge to be able to do DCA successfully over a period of time, even a year. If you try to DCA on a weekly basis for a year, try it. It's not that easy to do. So that's one of the do's. And then there's Satoshi Nakamoto academics website that is very informative. It's got so many information. It even got like courses that you can listen to about Bitcoin, about the crypto space. So that's a good starting point as well. And there is Bitcoin Mining Council that's been on since May, I think. So you might want to do your homework on that as well, just to see what's going on with this big subject of Bitcoin. What's available? What information is available online that I can read? And most of the information are transparent. This is a transparent world. Blockchain is meant to be transparent, meant to be informative. So that's DYOR. Any project you enter in, especially if you decided to allocate, a big amount of money from your portfolio, then you should do a DYOR. No, it's not easy. So and then the other do's I would say for newbies is you start with small funds. Say you have I don't know, say you have £20,000 that's sitting in a bank at the moment, getting an interest rate of 0.01, and you think, okay, I can't really afford another house or bigger investment, and I don't want to. But I'm quite happy to invest some of that savings into crypto. How much should I spend? I think if you're a newbie, don't put all that money in, because when you need something in an emergency situation, it takes time for the funds to come out back to your bank account, right? If you're stuck or if it's not a good time to sell, then it's going to be difficult for you. So definitely not all in. Maybe if you really like the market, you trust it, you think Bitcoin is going to be one of the best investment for the next 10 years or 5 years, then you might decide, okay, I'm going to put in £10,000 into this, which is half of my savings, and that's fine. Then, okay, so how much should I put initially? Okay, put maybe 500, maybe £1,000 to start with, right? Experiment, actually just learn the process of how I transfer my money from my debit card into a maybe a centralized exchange I registered. Do your KYC, right? Know your customer process that usually exchanges ask you to do. Make sure that process is smooth. Make sure you understand each single steps that you're doing, and then you're gonna start to buy Bitcoin, for example, or Ethereum from the centralized exchanges. Then you would apply things like DYOR, do your homework, and DCA, dollar cost average, to try to even the price and buy the lowest you can. So that's the first step. Start with small funds, adding a bit more every time when you feel more comfortable, more confident, when you learned things, when you've done a lot of your research, then you can allocate more funds, transferring from your debit card into the crypto exchanges. And then the second thing is um, go with the biggest. What does that mean? So things like, okay, I like crypto, I'm going to buy. What should I buy? Right? Apart from stable coins, it's Bitcoin. Okay, I'm into Ethereum, the whole DeFi world, for example, or I'm into a something that is not Bitcoin. What should you buy? Ethereum, of course. And if you decide, okay, I'm going to participate in the DeFi world, decentralized finance, where you can generate yield from participating in a different way, what should I buy? Okay, you're going to look at, okay, what are the biggest DEX, decentralized exchanges? Okay, there's Uniswap, there's SushiSwap. They're the two biggest one on the Ethereum chain. Then you probably go with either one of them, right? And then to provide LP or whatever, making exchanges, making transactions. And then you say, okay, I quite like some of the financial protocols. I think they are smart and they're giving me back bigger yield. Where should I go? Then you're gonna go to somewhere like Curve, Convex, Yearn Finance, Compound, or somewhere that is big, has a name, and it's been on the market for over a year, half a year at least, with no hacks, or they managed a hack very successfully, at least. And make sure they're the biggest top three. I would say top three, top two, even top one in the category that they belong to. That's the safest you can do. Because one thing you've got to understand, if you're participating in DeFi, you've got the Ethereum chain, right? You've got the DEXs, and then you've got the financial protocols built on the DEXs. So that's like 3 layer on Ethereum, okay? So the more layer you go up, the more risks you're taking. Now, smart contracts, we know they're safe. 99.99% of time, they're safe. You can trust them. But you never know what might happen. Your contract might go bust. Maybe the project will go rugged. Maybe there's something wrong with Ethereum when it's getting migrated. Something could happen. Nowhere is safe. The bank you put money in could go bankrupt. But of course, the likely chance of that is very, very, very small. But everything has a risk, and that's why people buy insurance in the legal in the legacy finance. And there's finance products in the crypto space as well, but it's just taking shape, so it's not as mature as the legacy finance. So there's still things that we need to develop we need to learn as well. So and the last thing I want to say on the do's is take your time and be patient. What does that mean? I'm naturally not a very patient person, I would say. I get very passionate about things. I get emotional, attached to things I do, and I like talk. That's partly why I set up the YouTube channel, because I just want to talk and share, and even talk to myself. And patience is something that sometimes go against one's nature. But patience is so important in the crypto space. Be friends with time. What does that mean? Okay, in crypto space, give it 4 years at least. We all know the Bitcoin cycle, right? It's every 4 years it has its halving. And whatever, if you don't know about halving, you need to go and do your own research on what is Bitcoin halving, right? So every 4 years, the blocks produces less, half of the coins that it produces the previous 4 years. So the coins are getting out less and less. So that's why it's disinflationary. That's why it can keep the value. It keeps the value, and also because there are only 21 million coins in total of Bitcoins. And that's why the value of Bitcoin can go up. That's the principle. That's the foundation of why everything goes up here. So take your time means really take your time, means you have a long-term plan of your investment. Same thing applies to like when you buy a house. People sometimes are scared of buying a house because they're scared of paying mortgages. Mortgage, do you know what the word mortgage means? It actually comes from a French word. Mortgage literally means you're tied to something until you're dead. Okay, so mortgage is actually a horrible thing if you explain it. Like, I'm tied to a mortgage that I pay to the bank until I die, basically. But of course, mortgage has a year limit on it, and usually it's 20, 25 years, maybe 30 years. But most of the time, you probably will sell your property or buy your upgrade to another place, a better property within a couple of years of time of your first buying. So you're not really going to tied with this particular property for 35 years, probably not. But the mortgage will be transferred by the bank with you to a new property. Okay, so when you buy a property, you take a mortgage. That is a lifetime planning. Okay, that means take your time. So a crypto space, a lot of people are very impatient because the natural of it allows people to make bucks like very quickly overnight, even over a couple minutes of time. They can do 2x, 5x, 10x, 100x, 1000x. And that phenomenon make a lot of people impatient, especially you're trading. You get so excited when you get so excited when you see the K lines going up and down and roller coasting and candle lights. Oh my God. And it's 24 hours a day, 7 days a week, never rest. And you just become really impatient. You wake up at midnight and thinking, whoa, is this going up? Is this going down? Have I sold? Did I buy? It's crazy. So I think step back, take your time, think how long you want to have this money into the space for. Maybe it's a 4 years cycle. I mean, nobody knows how long this Bitcoin cycle is gonna go. Like, it could be 4 years, every 4 years it goes like that. It could be just slightly go like that without a very obvious dip. And you never know what will happen in the future. So always have a long-term view. Say the example I was using, if you're putting 10,000 pounds into this space, just pretend you're not going to have this money out for another 10 years. And then what will you do? Okay, have that mindset. And then you can work out what you want to do. Then you will take your time and you will say, okay, I will buy slow and see how, understand how the price goes, with Bitcoin and Ethereum and DeFi. And then if you're into DeFi, you're going to be more likely to yield farming or providing LP or generate a percentage of APY somewhere from a protocol. And then, since you like APR of the particular finance protocol, you are going to wait for a couple of months, a year, to see if it works out the same way that it says at the beginning, right? If you only wait for one day, you're not going to likely to get very much. 1 month doesn't give you enough. And then stop looking at it every day. If you have the mindset of 1 year, just wait. Just put your money in and wait. Maybe check it once a month, but don't check it every day. And certainly not checking it every hour. I know it's difficult because I do the same. When I put funds somewhere, I get so excited. I go and check it every minute. I just look at the page. I could just literally staring at the pages. But that's not going to help the money grow. that only that only helps with your impatience grow, which doesn't help overall. So take your time is really another thing that you need to be aware of. So, and then I'm going to talk about don'ts. The first thing is don't FOMO. FOMO is a word that you hear many, many, many times in the crypto space. And FOMO means fear of missing out, which literally it means you get so excited and hearing things and you just go in like immediately without doing your research, without considering DCA, without thinking about starting small funds. Go with the top projects without take your time. That is FOMO, okay? And don't do that. Don't FOMO. I know, again, it's something easy to say, but difficult to do. But every time you have that emotion come up with you to say, oh my God, that sounds fantastic. I'm going to go in now. Otherwise, I'm going to miss out all the lovely APR. Then you know you're FOMOing. And tell yourself, don't. Tell yourself, okay, fine, that might sound more fantastic. It might be, really is amazing. But just calm yourself down first. Read everything I said. Read the website. Read whatever is available online. Read their Twitter, their Discord channel, and read the white paper and whatever articles are available on Medium or on the forum, and then make a decision. And I'm sure you will be a lot more sensible then after you DYOR. And then decide how much you want to put into this new thing that you just heard. And then maybe not a lot, maybe 1, 2, 3% of your overall portfolio. So even if it fails, you're not going to lose very much. And the other don'ts that I would say is don't FUD, FUD. FUD means fear, uncertainty, and doubts. And this type of mentality happens when the market goes down. So in the past 2 to 3 months, when Bitcoin halved, the price halved, Ethereum went down, everything went down, people were spreading FUD. And the FUD is the word that comes up a lot because people were afraid, people were having doubts, people were not sure, people were feeling depressed about the pricing. And again, that's something I was mentioning in my yesterday's video about. Don't just look in front of you. Look, if you're looking in front of you and around you, all you see is price is going down, everybody is flooding, and I'm totally screwed up. But no, it's not the case. That's why I say we should look forward. We should have a projection of what's going to be happening in the next 4 years and the next 10 years. Then you will be happier. Do you really think Bitcoin is going to be like 30,000 US dollar? Like 4 years down the line, like 10 years down the line? No, it's going to likely to be 3 times or maybe 10 times, and then if it really is 10 times, you're going to be so happy. You're not going to remember your FUD today you had. So that's why to have a long-term view is so important. The same as your house. If you bought this house and you paid a mortgage for 25 years, then you're not going to be worried too much about how much this property price is every day, is it? You're just going to look at your salary you get from your job. And so long as your salary covers the mortgage and you're happily living in the place with people you like, you're not going to worry too much about the property price going half tomorrow or double the next day or thinking about selling it every single second, right? So that's why it's important to look at Bitcoin and whatever assets you have in the crypto space as your assets, like assets that you're going to keep, you're going to hold, and you're going to use it as collateral to leverage in a healthy way to generate yield, like buy-to-let properties. But don't look at it as if you're going to sell your buy-to-let property tomorrow and buy another one the next day and buy another one tomorrow. It's just doesn't work and it doesn't help with your mentality. Well, unless you are a professional trader, like you trade 24 hours, but that's really tiring. And most of us aren't traders. We don't do that. We have day jobs. We have other things to do. And trading is important. Trading is a foundation technique that we should all have to be able to read the K lines, to be able to read all the indicators, to be able to understand the candle line and how it works. But do we really need to trade so much? No, we don't want to pay so many transaction fee. We don't want to staring at our computer or mobile phones all day long looking at candle charts. Aren't you tired doing that? I was looking at those at the beginning, and I don't look at them anymore. I look at them, okay, I look at them once or twice a day just to check bigger picture of, okay, I can see there are a big amount coming in, which probably means, the whales are the big players are pushing the price up. And like yesterday, if the Bitcoin price go up to 41,000 US dollar or break that and stay and hold that, then that means the pressure between 42,000 and 48,000 US dollar are less. So it's more likely the price will go up more. And what does that mean to me personally? Okay, my portfolio today is 20th of July, and my plan is to buy more Bitcoin by end of this month when I have some passive income generated from my curve position, right? So I care about that. I look at that price because I have some action that I plan to take. Now, if the price suddenly went up to 48,000, then maybe I would decide if I want to spend all the money or maybe I spend half. So that's why I'm looking at it. I look at it for a reason because I have action I plan to take after it. So that's a sensible way of doing it, but not just staring at it like all day long, right? So FOMO, don't FUD. And the last thing is don't gamble or don't have the gambling mentality, which is also something very difficult to do. And something I had. I can't say I don't have it anymore, but I try not to. I try not to gamble. I try not to have the gamble mentality of anything. Okay, so use an example of a project comes out by a YouTuber telling you this is fantastic. It's giving you 20,000% APR, and you just like, what? That's not something I should miss. So I go FOMO in, and then a few days later, the APR has gone to 20%, because the asset that is so volatile that it doesn't hold the price, and then maybe the total value locked has gone down because some whales pulled out or sold, and you'll be lucky if it doesn't go back to zero, like what happened with Titan, right? Iron Finance. And sometimes these accidents are not even intentionally. Sometimes it's just because a project is new, it's still taking shape. It hasn't got enough TVL, it hasn't got enough solid users, because once something is shaking, then the whole boat gets sinking. So that's why we need to stay with the big name. We need to stay with mature project that's been on the market for a long time, that you're safe and protect your capital, because this is the money we worked hard for. It's not easy money. We should always protect our capital before we take risks. So things like what's happening in 2017 and 2018 ICOs, is a lot of time you went to ICOs, it's gambling. It's like you don't really know these ICOs are going to be work out or not, and most of the time they don't. 9 out of 10 dead, right? And same as now after the DeFi summer, you've got so many yield farming comes out every day, like on BSC, on Polygon, on Phantom, on whatever, all the new chains. Now, I don't personally participate in any of them. I have a very small amount on BSC because it's an airdrop from Convex Finance. But I can't say all of them are bad and don't do it, because there are people doing it, and I'm sure some of the projects there are really quality. But then do your research and make sure you're comfortable with what you're participating. And there are tools around like Rug Doctor, RUGDOCTOR, Rug Doctor. So they assess all the coding on the projects on BSC, on Polygon, and on other chains. And they tell you they have like a grading system to tell you what is more risky and what is less risky. So that's part of the thing you can do at least to protect yourself if you are going to go into the market. So that's probably pretty much about the don'ts. So just in summary, do's. So DYOR, do your own research. DCA, dollar costing average. And start with small funds. Go with the biggest projects and take your time. And my don'ts are don't FOMO. So don't feel like you're missing out things. So don't rush into things, and don't FUD. So if you're getting frustrated, fear, uncertainty, or doubts on things, think longer term, think big, look forward, or don't look at it. Take a break, and don't gamble. Don't have the gambling mentality, and be very cautious if you're participating in ICOs or any farms or new farms in particular. Okay, so that's my do's and don'ts today. Thanks very much for watching today. It's a bit long, but it is things that I needed to say. So I hope that's helpful. And please do make some comments below if you have any thoughts to share. Also join my Discord and following me on Twitter. And I will see you next time.